Hi everyone, it's Dima Fakhoury, real estate broker with Century 21, and I'm here with lovely David Hetti. He's a great mortgage broker that I've been dealing with for years. He's helped myself with my mortgages, a lot of my investment properties, and a lot of clients as well. So welcome, David. Lovely to have you here. David, by the way, is great with the like he's very knowledgeable in the economy and holds an MBA, so he really knows what he's talking about. So today we're going to dive in about the market stats, and we're going to talk about what happened last month in March in the Toronto GTA area. And we're going to talk about forecasts, what we're expecting to happen, especially with the tariffs and that. So, David, I'm going to give it to you now. David, can you just introduce yourself a little bit?
Absolutely. Thank you so much, Dima, for having me. And it's definitely a privilege to serve you, your clients, your family, extended family, so on and so forth. As you had mentioned, yes, my background is mortgage brokering. I've been a banker for a lot longer than a mortgage broker. I don't want to express my age. However, that being said, I've been doing mortgages for about 20, 22 years now. And prior to that, I was with TD Bank, Canada Trust prior to that, and investment firms prior to that. So my experience is extensive in that area. However, my real passion is for mortgages because I think we truly get to help people realize their dreams and do something that's more suitable for their financial needs. And I've been, as I said, I started off my career at Invis Mortgage Intelligence. Mortgage Intelligence was bought over by Invis some years back. And last year, I found my own company within Mortgage Intelligence. They are still the service bureau. Now, the name of my company is called The Mortgage Doctors, Inc. I am the principal owner of Mortgage Doctors, Inc. So that's in a nutshell my background in the mortgage
Amazing.
business.
Yeah, you have a
Um,
lot of experience and knowledge under your belt, that's for sure. Okay, so without further ado, let's dive into the market and see what's happened last month. So I'm going to go into pull up some stats here. So for March 2025, we've had, let me see here. Okay, so detached homes in the GTA average price around 1,439,000. We're down about 1.8% since last year. Not a big drop. It is a drop, but not big. And we're going to talk into it later on about how that is really relative to the overall historical data that we've had and we've witnessed in the real estate sector since 1990. So, relatively speaking, we're still in the growth under the growth umbrella. Semis are down 0.9%, townhouses down 3.5%, condos are down 2.8%. So last month we've had 4.8 months of inventory, meaning that if we were to sell all the listings that we had of approximately 24,000 listings in the GTA, it would take about 4.8 months to sell all the inventory. Okay. Average days on the market is or was 24 days in March. So not bad. So let's dive into more detail and get your perspective on this. Why is this happening, Dave? Why is a drop? And what do you expect to happen in the near future?
Dima, what you mentioned, inventory turnaround time is about 4.5 months, which is a lot longer than what it has taken houses when they are listed. And there are reasons for that, right?
Mhm.
And I believe people are on the sideline waiting to see what the economic indicators are showing is going to happen. So let's take, for instance, tariffs, right?
Mhm.
Tariffs are affecting the auto industry and the steel manufacturing industry and any ancillary services surrounding those industries. Let's say, for instance, car insurance providers, car manufacturers, leasing, financing, sales, and repair. All these other sectors are getting affected. So people are wondering how the impact is going to be. So many people who have the money to purchase homes are waiting on the sideline, wondering how this is going to impact them. Hence the reason that this is happening. However, from an economic perspective, these tariffs are going to drive the Canadian economy into a recessionary effect. Bank of Canada right now, knowing this, the Canadian economy is not strong, even weaker than when it was when we experienced the COVID pandemic. So given all of these scenarios, we feel that the Bank of Canada has to bring down the rates even further. Whether it will happen in April, which is next week, whether we're going to see a rate reduction next week is questionable. I think at the current moment, the Bank of Canada wants to see where inflation figures come in for March. So given that, I can't see the rates coming down in April. However, if it does come down, that means they clearly have a mandate for the next coming months, which means they want to bring the rates down and bring the Canadian economy to stability. But having said that, certain economists are talking about the housing market, that they expect the housing market to see maybe a moderate decline in the next coming months. A moderate decline in the ranges of between 3 to 8% decline. That's fairly large when you look at the housing market. But having said that, we still have unaffordable housing. Absolutely. There are a lot of people on the sideline, unaffordable housing. So these are components that we have to look at. So in these all data, how does it affect our buyers and sellers? My consensus is we have to take one case at a time, Dima. So that's how I deal with, and I'm sure you are dealing with the same situation. We can't give advice to a grand scheme of people. We have to take each case for its merits and look at how the economy is affecting them, the industry they're in, and the down payment they're coming with. So all of these components come into the picture when we advise a buyer or a refinancier or a switch. These components are taken into consideration.
Absolutely. Now, a lot of people are on the fence because they're hearing from the news, a lot of negative information, negativity sells. The media thrives on fear. And so we need to actually look at facts, right? Inflation at one point was at 8% at its peak in recent years. Now it's down to 2.6%. Bank of Canada's target is to get it down to 2%. Now, with all the uncertainty in the economy and with our neighbors, I'm sure, and what I'm hearing from insider colleagues, is that we're up for another 3 rate drops this year if the tariffs are not revoked or in effect, essentially, because obviously if they don't, then things will go way higher. So haywire. What we're anticipating is, I'm hoping so, and I've been hearing, and you're probably hearing that too, we're hearing all kinds of things, but they really need to do these rate drops to build back confidence in the consumers. Now, yes, we are in a buyer's market right now, but that's a good thing for buyers because they have many options, but also because sellers are now on the fence too. Those that really need to sell are competing with less inventory. So what happens then when you have less inventory, more buyers, then it naturally increases price. So that you'll see price trends go up, and then we're going to see more bidding wars and that kind of thing. So it's a natural cycle. Like with real estate, it's ups and downs, right? The stock market is down right now, but does it mean that house prices are going to go down? We don't know. Back in 2008, when we had the recession, what happened was, yes, both of them, the market stocks did go down as well as house prices. But then in 2020, when we had another recession, the stock market went down, and then high prices went up, and that's mainly due to the lower interest rates. Canadians thrive, and the interest rates, they go by what's happening with the rates, really. If the lower rates, and we've seen a lot of people spend money when the rates are low, right? When the rates are high, they tighten up a little bit. So hopefully what we're hearing with a few maybe up to 3 rate drops by the end of this year, will intensify or increase house pricing or affordability. Yeah, but it will definitely intensify, it incentivize a lot of buyers and sellers as well, because then it will cause more of low inventory and high demand.
I'm seeing different trends. I'm seeing different kinds of trends happening. I do agree with you where the three rate drops are concerned. Bank of Canada rate drops, when I look at, I refer to a few places. I refer to Doug Porter at Bank of Montreal. I refer to Bloomberg, one of my go-to places for economic indicators, as well as economic updates. Bank of Montreal expects, Doug Porter expects the prime Bank of Canada rate to be around 2%. So we are right now at 2.75%. He expects the rate to be at around 2%. But there are significant changes happening whilst this is taking place. As I had mentioned with the tariffs, recession is a fear. So Bank of Canada has to do something around that. But that being said, if the auto industry and the steel manufacturing industry is going to get hit really badly, the Canadian government will have to support those industries. We know from the history they increased the money supply through quantitative easing, various different ways. If that does happen, we will see the 5-year fixed rates come down. Bond yields will come down with money supply. So
what is the fixed rate? Sorry to cut you off. What is the fixed rate right now?
See, that's the thing. This market is very complex, Dima. If you are buying, you can get a fixed rate for about 3.94% insured.
Which is not bad at all.
Which is not bad at all.
Yeah.
But see, if you can afford it, I tell people this. People are very leery of variable rates, as in the past year it has been a bit significant. That being said, if you can afford it, if you have good cash flow in your home, and again, these are all dependent upon individuals, their ratios, their credit, their debt servicing, as well as cash flow. So given all of these circumstances, I advise people to look at the variable rate openly. Given these circumstances, if Bank of Canada is expected to bring the rates down 3 times, that is not to say the fixed rates are going to come down. However, it's a good indication the direction of rates. So you most likely would get a better rate than what you are paying today, or what you would fix today. So individually, that's what I say to people, even with my videos, and I'm sure you see them on social media. I post them on a daily basis, if at all possible. My suggestion to people is talk to a professional, talk to Dima, talk to David, talk to us, and see how this fits you. As you and I both know, we've been doing it for a little while now. There is no one fits all solution.
Absolutely.
Right? Yes, the rates are doing what it's doing. Housing market is doing what it's doing. So does that mean a client who's in the market paying rent at $3,000 a month and has good money sitting in their bank and is talking to Dima about purchasing a house, should they wait on the sidelines? I highly doubt that's the solution. I think the solution is to have an open mind, look at what opportunities lie in the marketplace. Take those opportunities. Whether they will be available tomorrow, that's questionable again.
That's right. We don't have a crystal ball to tell you what's going to happen.
Absolutely. Right.
I always tell people, don't time the market. You never know what's going to happen. For all you know, the tariffs could be dropped today and then tomorrow prices start going up. So get in the market, get your foot in the market when you can, and don't wait on what's going to happen or what is forecasted, really, because we never could know, right? I always say, if you're selling and buying in the same market, it's all relative, it's all good. You sell high, you buy high, and vice versa. You in the same market, you sell low, you buy low. I always tell people that. But it's great opportunity for first-time home buyers to get in the market right now. We have a ton of inventory, condos, and they could really get some good deals. We are technically in a buyer's market right now. 40% of listings are selling, which puts us in a buyer's market. So whoever's selling really needs to do their due diligence in who to have on their team and their resources to get their house sold and not to be in the 60% of homes that are not selling. You don't want to just list your house, you want to sell it, right? So make sure your realtor, your mortgage broker are all on board and they're all aggressive. They know what they're doing. They're highly knowledgeable in the market, what's happening, and have the tools under their belt to actually aggressively market their property and negotiate good offers for them. But yes, you're right. There's a lot of mortgage products out there, a lot of speculations, a lot of uncertainty. So my advice would be to sit down with a mortgage broker like Dave, and I'm sure Dave will come up with a custom solution for your needs, right? Because he's done that for me, for my own property. So I trust that he'll do that the same thing for you. So what do you advise for people that the renewal is coming up and they don't know what to do? Should they go fixed? For how long? Should they go variable? I have a property that's coming up for renewal actually very soon, and I'm being offered all kinds of different rates, all kinds of terms and that, and I'm just wondering, what should I do? Should I go fixed for 2 years or 3 years, or should I go variable? What do you suggest people do at this point?
So I'm going to stick to the original that I mentioned to you.
Variable?
Yeah, no. The scenarios are simply related to your circumstances. I can give you examples. I'm dealing with this on a daily basis. I probably have 10 cases I'm working on at maturity, right at this current moment, where they've been given a really good fixed rate at the bank, and they're coming to me and saying, hey, Dave, is this the best option for us? Some of these folks may be carrying $65,000, $70,000 average in debt. Right? They've been in their house for 5 years. In the 5 years, they've accumulated some equity. Not as much as we saw in 2021, 2022, but yes, the market has stabilized. However, they still have equity base. So the solution for these folks will be different to a solution that I would give a person who's coming and saying, hey, Dave, I don't have any debts. I've got really good job security. I just want the best rate. So the solutions are different for each and every person.
What if someone but what do you suggest? Should people just go with the best rate right now? If all things are equal, let's say whatever, they have some equity in their house, but they're not they don't want to take any risks or chances. They're not thinking of selling in the near future. Should they go maybe do you anticipate, what's going to happen? What do you think will happen in, let's say, 2 years? So I know cycles up and down, right? We experience cycles every 2 years or so. It's up and down. There's dips in between. So what do you think in 2 years will happen? Should they actually do 2 years fixed, 3 years fixed, 5 years? Or should they just go on the variable? I get this question almost on a daily basis.
So in a situation,
I know it's custom tailored to each individual's portfolio, but generally speaking.
So the question that I would ask them very specifically is, this question will go a long way. Given your current circumstances, how is your cash flow? What do you feel about your job stability? So in a situation like this current moment, we've seen this. I think the very first year I entered Canada in 1994, they were going through a very deep recession and a depression. Yes. And that time, things were different. And then I saw the economies evolve. So given these circumstances today with the tariffs, uncertainty, we have an election coming up in a couple of weeks, right? Given all of these circumstances, the first question I ask people is, how is your cash flow? And the answer is generally, when somebody says, it's okay, that's when I dig deeper. That's when I dig deeper. Then I dig deeper and deeper, and I find that they have high interest debt. They are paying their child's rent at the university. We have our circumstances. They spend about $12,000 towards AAA hockey. Yeah. We need to take these circumstances into consideration. So hence the reason I'm saying a good question to ask someone is, how's your cash flow?
That makes
Right?
total sense. Yeah, because
Right?
everybody.
And based on that, we can look at, because it's very difficult to help someone when they're one leg in a very detrimental stage where
Mhm.
credit's taking a beating and their job situation is adverse. It's very difficult to find solutions.
Yeah, no, that makes total sense. It's very customizable. And yeah, that's why there's a lot of products out there to fit each individual's needs. Yeah, no, that's great. Okay. So what else?
I
We're
hope
good.
I have been very
No,
informative.
so there's a lot of fear in the market right now because we are in a buyer's market. But like I said, you need people that are strong in negotiations and expertise and knowledge to get you where you want to be in terms of either finding a home or selling your home, right? But essentially, if you look at historical data since 1990, growth has been steady at 4%, and that's the norm. That's what we want to see it at, 4%. Now, we've seen it go up 33% back in 2022, February 22, when we were at the peak, right? Now that's normal. And that was not normal. In 2020, we were also above trend. However, right now we're sitting at 0.05% in terms of growth. So don't let these numbers scare you. We're still growing. But if you're in it for the long term, or you want to hold on to your property, you want to sell and then just buy something and settle down, or you want to get into the market and hold on to it, it's good. It's not good for those that are flipping, that speculating. They want to just purchase something and then fix it up and flip. And we've seen that in 2022. That's not going to happen. I remember I had a client, we must have flipped maybe 15 houses in 21, 22, and they made tons of money. That's not going to happen. So yes, it's not for those kind of investors. But it's definitely, there's a lot of opportunities for buyers and sellers are as well, because you're only going to see serious sellers, which means less inventory, like I was saying, more competition on their property, which is good. So we can't always think negativity and then just follow what the media is saying. We need to look at facts because, like I said, media does sell negative news and doom and gloom. We need to really dig deep into the facts. But yeah, no, that's a lot of great information. So March, we've only seen, to summarize everything, in March, we've only seen a slight dip in the numbers. We don't know what's going to happen with the tariffs. There's a lot of uncertainty with the policy changes in that, with the elections coming up. But don't let fear get in the way of your dreams and what you need to do for yourself and your family. I think that's it for now. Dave, do you want to add in anything?
What I would like to add in here, Dima, is you've given some fantastic information. Yes, the data shows different spectrums. The current growth that you're seeing has a lot to do with uncertainty. It has very little to do with actual growth. The actual growth in the Canadian economy and the housing market, you will see once we are past this. Give yourself maybe 6 months to a year, you will see everything returning back to normal. Because there's a direct correlation between price increase in homes to population growth. So Canadian population growth is very stable. We saw astronomical growth in the last 2 years, but
Mm-hmm.
it's all stable now. The
Mm-hmm.
market growth will return back to normal. Rates, they'll return back to normal. One thing I want to say is to whoever is watching these programs, speak to a professional. Speak to a professional about your circumstances. Have a strategy. Have a plan. It's way better than walking into a bank, speaking to someone, and they give you off-the-shelf product. Don't go around calling every realtor. Speak to someone whom you have a personal connection to, such as
Mm-hmm.
yourself. Your customers have spoken very highly of you. I've worked with many of them, and they all talk about how personalized you are in their meeting their needs. So I urge people, look, select who you want to work with, get information that's relevant to you, and stick to that plan.
Mm-hmm.
Again, thank you,
Absolutely.
Dima, for the
No,
opportunity.
absolutely. I've been in the industry full time. I'm a broker, real estate broker. I've been in the industry over 15 years full time. I was in an investment aspect of it. Prior to that, I held an investment club of over 1,500 investors. And I've dealt with a lot of mortgage brokers and bankers and that kind of thing. But honestly, if you need real talk, the truth, honest information, go to David. Dave will lay it out for you on the table. He'll tell you as it is. He's not going to beat around the bush. A lot of mortgage brokers I know from dealing in the past, they just say, yes, we'll get you the product, we'll get you what you want, we'll get you what you want to hear. And then when the time comes, things don't work out and just things blow out of proportion and their hopes are going to become not in fruition. And yeah, so talk to Dave. He's really good with what he does. And I'll put all your information in the comments below. And yeah, get in touch.
Thank you, Dima. Thank you so much for this
No
opportunity.
problem.